Welcome back to Coinscrum Markets, and this week we're joined by Anton Golub, founder of Flovtec. Anton, thanks for coming back.
Hi, Teana. Thanks for welcoming me. And it seems like I always join you when the markets go up. So again, you know, a great time to be with you.
I know, you're like a lucky charm, Anton.
Yeah.
So let's talk about what's just happened this morning. So Bitcoin prices continue to rebound, and we broke through 50K this morning. What do you think this means for the market in general acting bullish? You know, we've had a couple of regulatory snafus over the last couple of weeks, notably the US infrastructure bill.
Yep.
And, you know, typically that tends to affect the price in a negative way. Do you think that this is just the market maturing and, you know, regulation being seen as a enabler to, you know, institutional markets, or is it unrelated? What's driving the price?
Yeah. So what I can say from a personal perspective, you know, the innovation in the crypto world, in the crypto industry, actually always happens on the edge of regulation. And many times when we innovate in the crypto industry, we're kind of like the regulation has to catch up with us over time. Now, when it comes to this particular infrastructure bill or infrastructure law that was actually proposed in US, I think the impact, or where a lot of noise was actually constructed, was around the participants in the crypto industry that would not be able to handle compliance requirements from that particular proposal. Yeah. Mm-hmm. Namely, a developer, if I was a developer and I would receive a payment from some wallet, for my work, I would have to identify who that counterparty was and actually construct a compliance document, stating that I know who was this is unfeasible for normal people. Now, the bill itself would not impact professional crypto companies, for instance, like Flovtec or exchanges or miners, because they already have those tools in place. So I think if you kind of zoom out, I think that particular piece of news was not going to be detrimental, and is not detrimental to the price. And in spite of all this negative news, the price went up. Now, as you know, I'm by nature highly optimistic and highly bullish on our industry. So I think this is the first small leg of a bigger leg that's coming. And what I can confirm is what we see in the back as a market maker is that the bull run is still on, and it's going to be here for the foreseeable time future, 6 to 9 months, a year if we are lucky.
Well, and there are, a number of people that share your optimism in that just having crypto be part of the, national discussion at a level of this infrastructure bill, which, was one of President Biden's, mandates, right? So the White House is looking at this bill as critically important, and that crypto is part of that discussion. Is seen by a number of people in the market as validation for the industry, that, it's actually, a legitimate industry, that so much so that the US government wants to make sure that they're getting their taxes.
Yeah, so it's good that we need to, and we should pay taxes, and so let's kind of mention this is very positive development. And I think also this should be actually a bit flattering to our whole industry that we are being mentioned in this particular context. And also kind of zooming out, this infrastructure bill is going to be probably the biggest and the most massive government spending ever in history that we're going to see. Maybe in the back, some money printing to support that, right? But I think, overall, this is going to be, it's highly positive for us. I think that also the bill itself is not going to be, it's going to have destabilizing effect long term, because this kind of massive government spending actually doesn't go hand in hand with normal economic policy. But I know it's kind of like we're driving this train of a lot of central bank and government interventions. It's very flattering for us, but also it means like that a lot of things that were maybe considered quite innovative and new maybe 10 years ago when the financial crisis was happening, and that's the reason why Bitcoin exists today, would be mind-blowing actually if you told that to people what's going to happening today, that crypto is going to be part of a wider discussion.
Oh, absolutely. No question. We've also seen, so the market overall is pretty bullish. Ethereum continues to achieve some stable price growth. There are definitely some standouts in the alt market with Cardano and Solana. What do you think is happening there, and what alts are standing out to you?
Yeah. So in the particular context of Ethereum, I think the big news was, or the big change was actually that as of today or recently, Ethereum is actually now deflationary cryptocurrencies. So actually, due to the burning mechanism that was introduced with the in the upgrade, actually today Ethereum is deflationary. I don't think that near term or short term it will have any significant impact, because there's a lot of appetite for Ethereum, and kind of the way we see the appetite exists is because people dip their toe, get into Bitcoin, and then they turn around, come back to us and say, okay, what's next? And then, the next thing is Ethereum. So this is kind of how I see it. And when it comes to Cardano, which is particular, personally very dear coin to me, what we see out there, that I think the development wise, Cardano has been lagging a bit. So they need to catch up, and due to that, the most of the appetite that we see for Cardano is actually retail based and coming out of Asia. So this is kind of a bit how I see it, But I mean, the Cardano has had the most extraordinary growth in the last couple of weeks from all the altcoins, kind of excluding the top Bitcoin and Ethereum. They had tremendous growth.
Yeah. Well, and then just on a follow up on to everybody wants Ethereum. This past week, we saw another notable cyber attack with 97 million being stolen from the exchange Liquid. How are these hacks, do you think, perceived by the market in general and consumers and kind of the trust level? It's kind of a two-pronged question. What impact do these hacks have?
Yeah, so just to explain, actually, previously I ran a crypto exchange, and it's actually very interesting for me to see. This is maybe what people don't know, but as a crypto exchange, you're actually under attack all the time. And if you're an IT developer in the back, you see it, and as a part of the management, you know that. So it's not surprising that this is happening with all the other exchanges. I think the context of Liquid was highly specific because it's a regulated trading venue out of Japan. And since this regulation aspect was inspiring a lot of confidence and trust into it, but we kind of now see firsthand that doesn't necessarily mean that the infrastructure was at the level that the trust and the confidence, was inspiring. In general, this news is actually very, very negative, especially on Liquid, which is actually a retail trading venue, retail exchange. Is not an institutional grade or for professional traders. So this is highly negative. I think it will have detrimental impact on Liquid in this particular context. If you remember, actually, KuCoin experienced the same quite a few years ago, and that they were hit quite hard because of that. KuCoin is still a great exchange, but I think this kind of things as the scale, if the reputation is high and the scale of the attack or hack is very, very big, I think that has overall very, very negative consequences on the exchanges. And I think that will happen the same as well now.
Yeah, and I think in the case of Liquid being, one of the kind of leading Japanese exchanges, that market is a little bit more, I don't want to say isolated, but a little bit more insulated, let's say, from the rest of the kind of retail trading market. Most Japanese consumers trade on Japanese regulated exchanges. So to have a hack at that level, I think it also brings to light the differences between regulators' mandates around how assets are held. So for a regulated exchange to have that many or that much in assets in warm storage, which was what was hacked, I think is interesting in comparison to maybe regulated exchanges in the US too. So it kind of brings about one of the discussions that we've had in the past around regulatory clarity and kind of setting best practices, because these exchanges are accessed by consumers around the world.
Exactly. And I think as you hit the nail on that one, the problem is actually what in finance you call an omnibus account, meaning that you pull all the assets together in a single account. And the fact that it's actually two things, both that it's actually within a hot wallet and the solution is centralized, meaning if that particular piece of technology is compromised in one way or the other, I mean, you have the detrimental effect. And I think also very interesting, thinking a few steps ahead, I think that the solution is actually a decentralized environment when it comes to custody, and a multi-sig environment where you cannot just, if you actually enter into the infrastructure, you basically can take out everything that you want. So I think, maybe thinking about the next steps, the future of trading is going to be semi-decentralized or decentralized environment when it comes to custody.
Yeah, indeed. All right, so let's talk a little bit about DeFi and kind of, bridge the gap between regulation and DeFi is a good example of We've seen a lot of recent activity from regulators, most notably FATF a couple of months ago came out with new guidance, and they basically said no such thing as DeFi. If a service is being offered, someone's offering it. And then last week, Gary Gensler, the new head of the SEC, made a similar statement around there is nothing in the market today that is sufficiently decentralized to, not be a market actor that would be caught within the regulatory scope of every other crypto asset service provider. So what's happening in the DeFi space and the regulatory space combined that's having an impact on the market? Are we seeing any changes? Because the DeFi market seems to do what the DeFi market does regardless.
So the DeFi market is absolutely booming. And also just to say on the personal side, I'm a huge believer in decentralization. Over time, everything will be decentralized. That makes sense to be decentralized. It's a long time to get there, and we'll have to kind of go through these ups and downs. This is just to mention on a personal side. So where we speak with people who come from the monetary institutions or the regulators, the problem is really for them is offering financial products to retail investors. I can just confirm they really don't care if a hedge fund goes out, trades some weird or crazy financial instrument and then blows up. This is professional institutional investors investing into hedge funds, and it's just, that's how the game is played. The problem is really on the retail side, where you have really many times wrong incentives, and I kind of can hint at that here now with yield farming. Really, you have astronomical returns offered to random individuals, where the downside is astronomical or catastrophical as well, that either there's a mistake in the code, these are the, kind of result in hacks or basically exploits through flash loans. But I think really this is the problem when we speak to them, or our impression is when we speak to people working with the regulators. I think that over time, the growth of the DeFi products will just keep on growing. And as it grows, there will have to be adaptation on the regulatory side when it comes to DeFi protocols. I think kind of if I have to hint at that, for instance, for me, a big inspiration and really fascinating growth was experienced by Binance at the beginning. And kind of they had a tremendous growth because they were actually at the edge of innovation. DeFi is now at the edge of innovation, and things will catch up on the regulatory side with DeFi protocols the same way they're catching up now with Binance. This is how I would say it, but both, the same way Binance is a leader still today, the big DeFi protocols, the Uniswap, Aave, and so on will be the leaders going forward.
Yeah, that's an interesting comparison. I think that a lot of the growth that Binance was able to achieve, post the ICO boom and the listing of a lot of these tokens that potentially maybe some of the other exchanges were unwilling to list at the time. And yes, kind of at that bleeding edge of innovation where it's so new that it hasn't even been looked at from a regulatory perspective. But we are seeing a significant response from the regulatory community to Binance kind of globally over the last couple of months. But I'm not close to, the commercial strategy or their market share. Doesn't seem to me like it's impacted it that significantly.
Yeah, I absolutely agree. And first, just to make a strong statement, Binance has gone through a more rough patch, both during the crypto winter, where the whole industry was under tremendous pressure. I have no doubt that the team will find the solutions going forward. Definitely, the way going forward is very clear for Binance, but also other players, is they will have to catch up on the regulatory side. I think that that going forward, I mean, they already introduced the first measure today. You cannot even operate trading even with smaller amounts without KYC. For instance, even in Switzerland, you can buy up to 1,000 Swiss francs worth of cryptos without actually doing KYC. So it's a very small amount. Today at Binance, you cannot even operate at all. You can only withdraw if you don't pass full KYC. So I think this is the way going forward. They will basically implement the standards around the globe. It's a global company, Binance, but all the other crypto companies, we are global companies. We operate in a global environment. Maybe we don't focus on certain jurisdictions for whatever reasons. But I think, all the exchanges, all the players will catch up on the regulatory basis across the globe, and we will find the right jurisdictions to operate from. Switzerland, for instance, for us being one of them. So I see it actually as a very positive development.
Indeed. Well, and there's some recent news this morning that Richard Tang, the head of the digital assets group at ADGM, which is Abu Dhabi Global Markets, so the regulator in Abu Dhabi has just joined Binance as the CEO of Singapore.
Yeah.
So regulators continue to, or ex-regulators continue to, move over to the crypto side, and hopefully that's a positive step for everyone, that they can kind of give the insights and the coaching required to these companies as they move into the next stage of growth.
Absolutely, and we invite more of them, and I'm sure many more of them will join aspiring crypto companies.
Yeah, indeed. Yeah. Okay, so let's move on a little bit. Facebook is a classic example of a firm that received some regulatory pushback when they attempted to launch, or they announced. Gosh, I forgot what it was called now, Libra, DM. Yep. And it looks like they're getting ready to launch their stablecoin Novi. What is the market saying about this?
Yeah, so just first to mention is that, we in Switzerland have a lot of affection toward this particular project, because actually at the beginning it was actually set up in Switzerland. But then kind of it didn't play out because maybe our we were not fast actually, catching up with the demands of this project, and kind of headed out in a different direction, Now, when this particular news first came out, actually, it was very interesting for me to hear why there was such a commotion around Facebook issuing a stable coin. Let's call it like that in plain language, And really the feedback that I gotten is that the financial institutions don't really see other financial institutions adopting blockchain technology as competition. They really see big tech companies as their competition going forward, and Facebook being the biggest one on the planet. So I think if if a traditional bank is not really maybe afraid of Goldman Sachs issuing a stablecoin, but they're afraid of Apple or Facebook issuing a stablecoin, because they can move very fast and innovate any fast. They have a track record of doing that. And that's where a lot of commotion was happening. I think in terms of the project itself, it's been very underwhelming because there was a lot of aspirations and a lot of ambitions that was communicated very early on, but nothing happened so far. And I think really the challenges could be really on a regulatory side, that you have a big tech companies issuing their own currency. This is really in plain language what's happening here. And I think this is what scares a lot of the government, which usually in the back, they're supported by financial institutions. So I think this is where a lot of the issues we have for them. I think it would the impact, not necessarily in the development world. I mean, in Switzerland, if you issue a stablecoin, I mean, who really cares? It's like not much changes. But I think if you're in the developed world, and we're really seeing what's happening, for instance, now in Afghanistan, imagine there, people have cell phones there, they have Facebook. It's not like mind-blowing, thing to say today. Imagine if they would have a stable coin issued by one of the biggest tech companies on the planet, and they could use it to support during now the transition of the governments or operating systems, how you want to call it. I think that's the big vision there, where the big impact could happen. And I think we need to focus on that.
Yeah. Well, I read another article and I think it was CNBC, taking a look at the situation in Afghanistan right now, and having a complete disruption to your monetary policy and system, and then having to potentially emigrate to another country, or consolidate your wealth, or you've got people that are outside of Afghanistan trying to send money in Afghanistan, and crypto is a perfect use case for that. And I think that this article was kind of addressing it like, well, this is this kind of myopic, one situation that doesn't necessarily impact the rest of the world, right? This is just happening in Afghanistan, but it's not just happening in Afghanistan. And I think it has always been one of the promises for crypto that it could disrupt and greatly improve cross-border remittances, especially in countries and a store of value in situations just like this.
Absolutely, yeah. And just to mention on the personal side, actually, so I'm originally from Croatia, and actually in the 80s, there was a hyperinflation, one of the biggest ones in Yugoslavia. So I remember the stories that my parents used to tell me, how that money was worthless. You wanted to get rid of it as fast as possible. And kind of now when I was reading, not necessarily the same article as you did, about the situation in Afghanistan, and I read, they said, oh, the banks ran out of cash. And I was thinking like, wow, I don't even have a physical wallet because I live in Switzerland and I pay with my phone. But imagine if people there could have the same privilege that I have today. I think this would be an amazing achievement for our industry. And, as you said, maybe one day this is the use case as people like to challenge us many times, what are the use cases? I think maybe we'll be proud one day if in a different environment or this one context, those use cases would come to good fruit,
Yeah, I agree. All right, so let's take a quick look at the what's happening in the institutional space over the last 10 days or so. So there's been some big changes in leadership at SDS and SIX, which are regulated security token exchanges. What's happening with the shift there, and what does that indicate around growth and adoption?
Yeah, so to provide a context, SIX is the largest Swiss exchange and one of the biggest European exchanges, and they launched a digital exchange, meaning kind of for blockchain-based assets, and they had a really big ambition, launched it with a lot of publicity in 2018, and kind of the vision was like so just for context, actually SIX as an exchange is owned by the banks in Switzerland fully. So they are the owners of the exchange. And the idea was like, how can we actually offer infrastructure and create a fully integrated infrastructure between custody, trading, settlement, and clearing on the blockchain, such that actually the traditional Swiss banks can actually catch up with a rapidly evolving crypto industry. And I think I described maybe the challenges why nothing has gone live in the last 3 years, because it's actually a company fully owned by traditional banks and has an ambition to be highly innovative, provocative company. And I think maybe that's actually where there was a lot of challenges when it comes to delivery, because in the end, this is still a startup, even though they have a ton of money, it's a startup. And I think the changes in the leadership reflected the fact that delivery has been very slow. I think it will be a game changer globally, because it will be actually, in fact, the first truly globally regulated exchange. So not a trading venue. For instance, in UK, I'm sure you have a regulated multilateral trading facility called Archex, but to have a regulated exchange, that would be the first globally. And I think there's a lot of issues and complications why that happens. And maybe for context, some people know it's because it touches into law. And for instance, market infrastructure law, which is incompatible with the blockchain world. Basically, the law says it has to be centralized depository entity, and you live in decentralized environment. So I think that just actually symbolizes the fact that security tokens are difficult. A lot of people are talking about them and saying how big it is going to be one day. Is just not happening. And maybe if I can tell you what we see out there, there's not going to be an exchange anytime soon, but you're going to have a lot of dark pools. So basically, when you're a bank, you can launch a dark pool, and banks, we have 2 of them in Switzerland, but more of them coming. They're going to launch dark pools where the security token will be able to be traded, and then you have market makers or traders basically connecting all of these dark pools, and you're not going to have an exchange anytime soon. So this is kind of how we see, but I think from a project perspective, it's phenomenal. It's just we kind of see that it's very slow in delivery.
Yeah, well, that's what happens when you're operating at that bank level. And I think both you and I have both been involved in projects while working for banks where, great intention, next to no execution.
Yeah.
Politics, the infrastructure, the legacy systems, the internal, sentiment and temperature is tough, right?
Yeah. Almost like crypto startups, so this is the same level actually.
Yeah. And we've seen a significant amount of M&A activity in the crypto world recently, the Polygon acquisition. So are we going to start to see more consolidation, or is this just an indicator of growth?
Yeah. So I think that so in 2018 we had a lot of M&As because kind of like a lot of the crypto companies were at the edge, and then you had actually natural synergies. So that was actually, if you kind of recall 2018-19, that was kind of like the play. Today the play is actually purely growth, and I think we see that a lot. I mean, you mentioned a great example, which was Hermes Network and Polygon, but I think we see it, for instance, with Coinbase is just running around and buying stuff. That's useful pieces of infrastructure for their own ecosystem. And today, at least what we see, that the M&A activities is purely growth. But even that, I think we're not going to see many of them, because the ease which you can get capital today or money today in the crypto space is mind-blowing. So I don't think that will happen. I think we'll have growth-focused M&As going forward. But actually, if you just want to raise capital, I think Bitpanda raised now 200 million again at I don't know what's crazy valuation. So I think if you want to get capital, we're not going, you can just do that through fundraising. I think the M&As will really happen where you have actually synergies And it will be actually basically acquisition of teams, not necessarily acquisition technology, or acquire the whole team. This is kind of how I see it. Yeah.
Yeah, that makes sense. All right. Well, you had a conversation with Paul a couple of months ago, and you gave us your Bitcoin price prediction by the end of the year. Do you want to remind us what you told us? What it was going to be?
I'm very happy to remind you and myself and the audience. I said very confidently, I was like, it's going to be 200K by the end of the year. I didn't look very smart in the last in the last 2 months, but in the last couple of weeks, it maybe has a bit more solid ground. I absolutely am. So at least what we see happening in the back, the bull run is still on. I think the markets will go where I actually said, so I still firmly stand by my conviction, 200K, but usually people are wrong. But I think that the markets will overshoot what I just mentioned, and it will be higher than that, and maybe even higher. But but I'm really stand firmly. I think we're going to end up at 200K. We have another 6-9 months, maybe a year, if we're lucky, of a bull run. And let's see, on the next follow-up interviews, how smart or not smart I look like.
All right, brilliant, Anton. Thank you so much for coming back. It's always fun to chat.
Likewise, a pleasure. Thanks for having me, and wishing everyone to stay liquid.